45 points lower. So it's a, in percentage terms, it's nothing. It's a flat kind of a day. But so much happening at this individual stock level. We've discussed a bunch of names. Look at Piramal Pharma. We had that at the bottom as an alert, 6% higher. Varun Beverages, we had the company with us in the morning, sounding extremely confident. Numbers, of course, were very strong. And these are, of course, high-quality businesses, Varun Beverages. There is Reddington, which continues on the trot for the second straight day. Biocon, it's been a huge underperformer. That's up about 5%. Some of these rail infrastructure stocks like RVNL are coming up about 5-6%. UCO Bank, again, in the PSU Bank space, I mentioned Bank of India, but look at UCO, that is up about 7%. Indigo Paints, of course, we highlighted as well. So this is a stock-specific, broader market, mid-cap kind of market that you are looking at, not so much about the index really. Charandeep Singh and Varun Daga, co-founders and fund managers at Girik Capital, are joining us to take some questions now. Thanks, gentlemen. Great to have both of you here. Charandeep, just a quick word first to kick off our discussion on what happened with the Fed and the US price action overnight, and whether that kind of caps gains from here. Or you think, that's no problem. And outperformance, resilience here, which have been hallmarks of the market this year, that continues in an outsized way even from here. What's your sense?
I guess you can't argue with the market. It seems to have a mind of its own. Hard to predict this. At the end of the day, there are enough stock-specific opportunities, thematic opportunities in the markets, and we basically spend our time going out and hunting for those, rather than worrying about how much the Fed is going to raise interest rates and how overall markets will react. So we'll focus on the underlying stocks and the underlying earnings growth. And that'll be what our focus will be for the next year.
All right. Hi, gentlemen. Good afternoon. Nigel on this side. I'm just looking at your portfolio, and Bharti Airtlel appears one of the top allocations. Earlier, it was Reliance. Could you tell us, have you changed things around a little bit?
I'm happy to take that. Very, very briefly, Nigel, look, we're of the view that there are some super trends on in the Indian economy and in the Indian market. And one of them is that earnings in telecom in general are going to go up a lot. There's a lot of good tailwind from price increases that both Bharti and Reliance are benefiting from. So, we're taking a telecom view on the sector a little bit. There are only two players here, really. So, we may play with weights a little bit here and there. But in general, thematically, this has been something that's been in our portfolio for a long time. And, we continue to hold these and believe in these earnings stories and these earnings acceleration stories because of what I mentioned.
Okay, all right. Got that, Charandeep. Thanks for clarifying on that front. So telecom is a space that you're like, and you're moving things around. Maybe you're changing the weightages on both those two stocks a little bit. But, we have a lot of guests who come on the show. And when we ask them sometimes about these new age themes, it's a blanket no, or it's a blanket avoid. Part of your portfolio, you'll have Zomato out there. And you'll have, indicated that you all are fairly positive on this space. Could you tell us whether there will be a whole host of new age companies where there will be supply that could potentially come in there? Are you all scouting? Are you all looking at them? Maybe the Nykas of the world where the business is quite solid, while a Paytm is a third of what it was at the IPO price. Have you looked at any of these? Would you all be interested?
Sure, I can take that. Thanks, Nigel. So, I think rather than looking at new age as one basket, I would say that one has to go into each companies, and I think each one of them have very different fundamentals and very different triggers. So, each one of them have their own fundamentals. So, and something what we liked was Zomato because it was more of a story which we felt that has a long tail and a two-player market. We like that industry. We think it's getting consolidated. It's getting organized. We feel that there will be some discipline in pricing. So that's about it. And we thought that the price also has come into the in favor. So a lot of these companies, the prices are now coming in favor in terms of valuation, and one needs to go very, very stock specific, bottom up and see if there is some light, some sight in terms of earnings and in terms of profitability. And if one can see that, I think some of these are decent franchises if bought at the right price.
Varun, afternoon. In the PSU banking space, you have State Bank of India. But the mid-cap PSU banks are also reporting very strong numbers. Would you look to buy into some of these smaller ones?
Yeah, I think that's a good point, and we've been quite bullish on the sector for some time now. But we obviously picked the best or the largest in the sector. I think the main theme here is basically, we were seeing some data, and now, of course, there's a lot of talk about it, but the slippages have come down for many of these PSUs from almost 8-9% to around 2%, and it's improving. And for the first time, we're seeing many of these banks talking about growth going forward. So I think it's an interesting space. Of course, they all are in a good environment because they've been able to raise rates, but now the deposit rates will also go up. So there will be some NIM compression, but overall, we feel from a structural point of view, I think these are very, very interesting stories. Of course, near-term euphorias and right entry points one needs to see. But yeah, these are large banks, and if the growth continues, then, and if also the NPAs have really come off, and if no new blunders are made, then I think there is definitely money to be made in some of these companies from 3 to 5 years perspective.
All right. Gentlemen, stay with us. SRF numbers are flashing at the bottom of the screen. I think we can go across to Sonal, who's standing by to get more deep. Okay, I think we'll have that up in just a bit. The stock went up sharply. It's come off. EBITDA seems to be below expectations. And revenues are a little under, but not by some 2.5% kind of miss on revenues. But EBITDA seems to be materially lower as compared to what the poll was indicative of. While we wait for SRF, let me just pose one more question. Varun, you own Metro Brands, right, in your portfolio?
Yes, we do.
I don't know if you saw the numbers from Relaxo Footwear. We were talking about this earlier. Numbers are pretty poor. Now, is that a function of being in completely different segments? Any thoughts at all? I mean, footwear, but one is perhaps on the premium end, the other is mass. Is that how you'd look at it? If you've looked at the numbers, that is. Go on.
Sure. I mean, I don't want to get into each results, but I think the models are very different. And one is a brand-specific guy, the other is a retailer. So I think one needs to get into, each segment and how they've done into, different formats, because they also run different formats. One is, on major sales for Relaxo comes from the MBOs, which is, multi-brand outlets. For Metro, it's a completely different model. So I guess one needs to understand where they are in terms of their formats, their models, and also there is a lot of competition now that's creeped in from a lot of new brands online. So one needs to see who is on top of their game. But I have not got into great details in terms of Relaxo.
Okay, stay on, Charandeep and Varun. Let's address the SRF numbers. My colleague Sonal looks at the numbers closely. She's analyzed them, and she's here to give us her initial take on the numbers. Sonal?
Thanks a lot for that. Well, it's a definite top-down miss as far as SRF's numbers are concerned. Revenue slightly lower than estimates, but the bigger miss definitely has come in on the margins at 20.6% versus an expectation of a 24% margin. The expectation was that, yes, margins will improve on a YOY basis, but that has not happened. This has led to a profit miss as well, though profits have increased on a YOY basis. But if we look at the segments, what has not done well for the company this time around, both packaging segment and technical textiles, they have seen a decline in revenues, plus they have seen a decline in margins as well. Specialty segments, on the other hand, continues to fire on all parameters. Chemicals revenues are up 62% and their EBIT margins have gone up by 600 basis points, coming in at 28.2%. If we talk about technical textiles, there the revenues have declined by 16%. Packaging volumes have gone up by, revenues have gone up by 23%. That is led by higher volumes coming in from new facilities. However, because of extra supply coming into the market, BOPET spreads had come down, and that's why the EBIT margins have fallen by 1,000 basis points. So definitely the laggards here are the technical textiles and the packaging segment, and the miss here is much more than what was expected, and hence the margin miss is what we are seeing on SRF. So it goes down as a top-down miss.
Okay, all right. Thanks a lot for that, Sonal. Charandeep and Varun, in your portfolio as well, you'll have Gujarat Fluoro. I recall at one point of time there was that valuation catch-up that had to take place. Both those two stocks are up between, 5 to around 6 times in the last 4-5 years or so. You'll still believe that there's a good runway for some of these companies, specialty chemicals companies?
Nigel, I think it's very stock-specific rather than sector in this case. If you see the specialty chemical sector too is very large, and they have, so many listed companies in there. So, in this particular case that you mentioned, there's, it's completely stock-specific at play, and it's a large capex and earnings growth story actually. It's a very specialized company. If you look at the whole sector, India has a decent fluorochemistry sector in terms of Navin, SRF, and Gujarat Fluoro. Of course, they are all in very different specialties. One must also be watchful of the fact that they could start getting into each other's territory a little bit, although it's too early to mention that. All this said, if one has a long time horizon and you have 4 to 5 years to hold on, there's definitely a lot of tailwind over here, right? Near-term valuations are a challenge in many of these companies. So one has to be able to sit through certain pain in the event near-term earnings expectations are not met. That's the only thing that we'd want in such a case.
Gentlemen, thank you very much for joining in. Have a great day. We now need to turn our attention to our IPO corner. Bikaji Foods IPO has opened for subscription today. It will